watching India Today.
Welcome to India Today. The Commerce Minister is speaking right now. Let's cut directly to his press conference.
93,000 पाकिस्तानियों को छोड़ते हुए देखा कांग्रेस को। क्या उन्होंने पाकिस्तान ऑक्युपाइड कश्मीर क्यों नहीं लिया उसके सामने? कौन सी ताकतें थी जो इंदिरा गांधी जी के पीछे उन पे दबाव डाल रही थी, जिसके तहत शिमला समझौते में देश के साथ कॉम्प्रोमाइज किया गया? इसका जवाब देना होगा कॉम्प्रोमाइज कांग्रेस को। क्यों पाकिस्तान ऑक्युपाइड कश्मीर नहीं लिया गया जब 93,000 पाकिस्तानियों को छोड़ा गया, बिना देश के हितों को संभालते हुए, देश के साथ कॉम्प्रोमाइज करके, देश के सुरक्षा के साथ गांधी परिवार ने कॉम्प्रोमाइज किया। और किससे चलते ही जाते हैं। जवाहरलाल नेहरू जी ने किस प्रकार से बार बार देश के हितों के साथ कॉम्प्रोमाइज किया। उनका सेक्रेटेरिएट तो कहा जाता है एक ओपन बुक था सीआईए और केजीबी के लिए। 1954 में 1954 में उन्होंने देश के तिब्बत के ऊपर सभी हितों को चाइना के समक्ष झुकाकर देश को कॉम्प्रोमाइज कर दिया, देश को शर्मिंदा किया, देश को कॉम्प्रोमाइज करना पड़ा। सामने कुछ हासिल नहीं हुआ। उन्होंने पंचशील के नाम पर अक्सई चीन दे दिया चाइना को। इससे बड़ा कॉम्प्रोमाइज क्या हो सकता है गांधी परिवार और कांग्रेस का? और चिट्ठियां लिखी यूनाइटेड नेशंस को कि चाइना को परमानेंट मेंबर बनाया जाए यूएन सिक्योरिटी काउंसिल का, जहां भारत को बनना चाहिए था। भारत ने अपनी सीट छोड़कर चिट्ठियां लिख के कहा चाइना को बना दिया जाए यूएन सिक्योरिटी काउंसिल का परमानेंट मेंबर। यह कॉम्प्रोमाइज गांधी परिवार और कॉम्प्रोमाइज कांग्रेस क्या इस देश को समझती है? क्या देश हित और जनहित को समझती है? अपनी जागीर समझने वाली गांधी परिवार को जनता ने मुंह तोड़ जवाब देना है। बहुत बहुत धन्यवाद।
इस विषय से जुड़ा कोई सवाल, इसी विषय से जुड़ा नीरज।
भारत का स्टैंड बड़ा क्लियर है। भारत डायलॉग और डिप्लोमेसी से इन सब प्रकार के मुद्दों को सुलझाने में विश्वास करता है।
पवन गौड़।
आप अपने दिल में और अपने मस्तक में सोच के बताइए कि जब दुनिया के 20 देशों के बड़े बड़े राष्ट्राध्यक्ष या प्रधानमंत्री, हेड्स ऑफ स्टेट, हेड्स ऑफ गवर्नमेंट भारत की उपलब्धियों को सेलिब्रेट कर रहे हैं, 118 देशों से डेलीगेशंस आई हैं जो आश्चर्यचकित रहे हमारे युवा युवतियों के हुनर को, भारत के टैलेंट को, भारत की उपलब्धियों को देखकर वाहवाही कर रहे हैं। ये नंगा नाच जो कांग्रेस पार्टी के नेताओं ने करवाया वहां, और मैं सीधे तौर पर राहुल गांधी और प्रियंका गांधी को पूछना चाहता हूं कि क्या उनका हाथ था इसके पीछे? क्या उन्होंने देश को नीचा दिखाने के लिए देश के साथ कॉम्प्रोमाइज किया, वो नंगा नाच करवा कर? जवाब देना चाहिए राहुल गांधी और प्रियंका गांधी जी को।
विकास जी।
मैंने कई बार कहा है, फर्जी, झूठ और फरेब के आधार पर राहुल गांधी जी फिर देश के हितों को और देशवासियों के हितों को कॉम्प्रोमाइज कर रहे हैं। बहुत स्पष्ट है कि किसानों के हितों को पूरी तरीके से सुरक्षित रखा गया है। ट्रेड डील में कोई किसान को किसी प्रकार का नुकसान नहीं हुआ है। कांग्रेस और राहुल उसमें भी देश के हितों को कॉम्प्रोमाइज कर रही है। आज लाखों करोड़ लोगों की नौकरी को सुरक्षित रखा है, लाखों करोड़ रुपए के कारोबार को देश हित में सुरक्षित रखा गया है। देश की अर्थव्यवस्था को सुरक्षित रखने के लिए हर कदम उठाया गया है। विश्व के बड़े बड़े देशों के साथ, चाहे यूरोपियन यूनियन हो 27 देशों का समूह, यूके हो $4 ट्रिलियन की अर्थव्यवस्था, स्विट्जरलैंड और 4 देशों का एफ्टा समूह हो, ऑस्ट्रेलिया हो, न्यूजीलैंड हो, ओमान हो, यूएई हो, अब तो जीसीसी के 6 देश कल ही आकर लॉन्च करके गए। सब देश के साथ संबंध बढ़ाना चाहते हैं। सब देख रहे हैं आप सबका, युवा युवतियों का हुनर। ऐसे में आप बताइए कि कौन कॉम्प्रोमाइज कर रहा है देश के हितों के साथ, कौन भ्रमित कर रहा है, कौन झूठ और फरेब फैलाने की कोशिश कर रहा है। मैं साफ तौर पे आपके माध्यम से देशवासियों को बताना चाहता हूं कि गांधी परिवार कॉम्प्रोमाइज्ड है। उनसे देश की अर्थव्यवस्था तेजी से बढ़ रही है। देश के किसानों के हित मोदी सरकार सुरक्षित रख रही है। देश तेजी से आगे बढ़ रहा है। ये दुर्भाग्य से उनसे देखा नहीं जाते हैं। कांग्रेस और गांधी परिवार पूर्णतः कॉम्प्रोमाइज्ड परिवार है।
देवेंद्र प्रसाद।
राहुल गांधी जी की चुप्पी अपने आप में कुछ रहस्य छुपा रही है।
दीपक चौबे।
मैं निंदा करता हूं इस प्रकार के शब्दों का। प्रधानमंत्री नरेंद्र मोदी जी देश के सबसे लोकप्रिय नेता है, विश्व के आज सबसे लोकप्रिय नेता है। हम सब ने देखा है कि बार बार कांग्रेस पार्टी और उनके मित्र दल, चाहे डीएमके हो, चाहे समाजवादी हो, चाहे तृणमूल कांग्रेस हो, ये सब मिलकर प्रधानमंत्री जी को बार बार गाली गलौज करते हैं। लेकिन ये देश की समझदार जनता है जो सब समझती है, जो बार बार इस कॉम्प्रोमाइज कांग्रेस, कॉम्प्रोमाइज गांधी परिवार जो आज पूरी तरीके से बौखला गई है, पूरी तरीके से एक्सपोज हो गई है, उसके इस प्रकार के वक्तव्य से भी मोदी जी और मजबूत होते हैं देश सेवा करने के लिए। मोदी जी लाख कोशिश गालियां दे दे कांग्रेस पार्टी और उनके मित्र दल, मोदी जी जनता और देश के लिए पूर्णतः अपने आप को समर्पित किए हुए। बहुत बहुत धन्यवाद।
दो सवाल, छोटे छोटे सवाल भेजिए।
Minister Piyush Goyal countering Rahul Gandhi's compromised PM attack. So it is the keyword compromise that featured significantly in his press conference as he replied back to Rahul Gandhi, who had claimed that the Prime Minister is compromised as he did not cancel the trade deal with US and made a compromise as far as the farmers were concerned. But it was that allegation that was being replied to by the Commerce Minister there, as he actually said that it is the Gandhi Nehru family which has repeatedly compromised the national interest, the interest of the nation at various junctures. In fact, he also said that during this protest for the AI summit again, the national interest was compromised. And now let's go across to Sakshi Batra of Business Today, who joins us with all the updates of the market. Sakshi, over to you.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good afternoon and welcome to the Business Today show. This is the market closing show. I'm Sakshi Batra and here is where we get you all the market closing action on the day street. First up, let's take a look at what's hot in the corporate and the financial world. After yesterday's sharp sell-off, markets see a brisk action and remain volatile in trade. Sensex is nearing 82,400 while the Nifty is around 25,500, swinging between gains and losses, even as buying in metals, autos and pharma stocks continues to provide support to the broader markets. IT stocks rebound after yesterday's rout, with the Nifty IT index now up 2% in intraday on strong global cues. TCS and Infosys are among top Nifty gainers as Nasdaq's rally and positive Anthropic commentary helped calm AI disruption fears. Midcap IT stocks also up by over 3%. It is the solar stocks, however, that have been hammered in the session today after the US has imposed a steep 126% duty on Indian solar imports. Bharti Energies, Premier Energies and Vikram Solar are the stocks that have seen a sharp correction in trade today, with the exposure in the US and of course focus and sentiment also hit across the solar pack. Jefferies turns bullish on globally exposed auto component stocks, naming Bharat Ports, Motherson and Sona BLW as the top picks after steep FY27 EPS downgrades through calendar year 2025. Earnings revisions are now seeing clear turnaround. Precious metals rally as safe haven demand returns amid global uncertainty and softer rupee. MCX silver now surges 7,000 rupees to 2.67 lakh rupees a kilo, while MCX gold also gains 1,200 rupees to 1.61 lakh rupees per 10 grams. Right, let's quickly look at how the markets are trading in the last about 20 minutes, 22 minutes in trade. The Nifty is up by about 0.2% in trade right now. So we have slipped from the day's high point and the volumes have also cut down. You can actually see it's the second half where, selling pressure emerged from the high levels, even though we are still maintaining about 0.3% up. It's the Nifty Bank that's now slipped marginally lower. And in fact, it's again trying to inch up higher in trade. So a lot of volatility in trade right now. This is despite the fact that India VIX is still trading at around 13 odd levels. The sectors that are trading under pressure are PSU banks, infrastructure, FMCG. These are the sectors that are down in trade, but it's the IT stocks that are actually rebounding. You can clearly see the IT index is up by 1.7%. Pharma and autos have also led from the front in today's trading session. You can see on the Nifty as well, a lot of these IT names returning to flavor. Look at HCLTech, that's up by 3%. It's the top mover on the Nifty today. Look at even Bajaj Auto, 2.7% higher, and look at what the auto index is reflecting. These are the names that have really helped it support higher in trade today. And Bajaj Auto is up, Zomato is also up and about in trade, Tata Steel, Shriram Finance, these are the names that are higher in trade. Even Tata Steel is up and about, and Indigo is also doing well at this point in time. But on the lagging front, you'll see Reliance Industries as a heavyweight counter that's somehow curbing the upside, 2.2% lower for this one. It slipped below the 1400 levels. State Bank of India, Eternal, Adani Ports, Bharti Airtel, and these are the stocks that are actually trading under pressure, anywhere between 1 to 1.5% lower in trade. But let's quickly look at what's happening on the solar stocks at this point in time. A 126% duty announcement from the US on solar imports is something that has really led to some selling pressure across the board on the solar stocks. We now have special guests joining in. Mr. Ganesh Chaudhary, the CMD of Vikram Solar, with us on the program. We also have, other guests also joining in. We have Abhishek Chi joining in from Wari Group. Warm welcome to both of you. Thank you so much for taking the time out for this special discussion. Of course, this is the space that's been in focus since the morning. I'll come to you, Ganesh, first to help us understand, your own exposure in the US so far in terms of your exports, and what does this news flow of 126% duty and how does it really impact you?
Hello, Sakshi. Thanks for having me. I think, first of all, there's a clarification on the duty that has come into play. It's mostly limited around solar cell, whether assembled or not. And as a large manufacturer and exporter, we don't necessarily see that Indian domestic cells will be used in solar panels which are exported to the US. So the impact on Vikram Solar is nil, so to speak, because currently our cell capacity is coming upstream by end of the year. Parallelly, we have a domestic cell supply deal for domestic market already in place. So our impact on this tariff is nil, so to speak.
So impact is nil. So you won't be impacted at all with this 126% duty that has been coming in, and therefore we do see some recovery on the stock as well. We'll of course understand in more detail with all of this, but let me also bring in Abhishek Parikh into the conversation. Abhishek, for Waaree Group, of course you have already got presence in the US. You have capacities there, manufacturing facilities there. You're also building up, of course, a lot of mergers, acquisitions taking place in the same region. You're also stepping up your investments. What does this news flow really mean to you and to your exports?
Thanks for having me on the show. If you look at the announcements, this is largely around the manufacturing of solar cell, which has got impacted by this recent announcement. So if at all you are manufacturing solar cell in India and then also assembling solar panel in India and exporting to the US markets, so that's a particular case wherein the duty shall impact or duty shall be levied. However, if you look at our strategy of supply chain and exports to US as well as local manufacturing in US, in past also, what we have done is we have created an alternate market of supply chain wherein we source solar cells from those markets which are acceptable and allowed in US markets. We import those solar cells either in India, manufacturing in our Indian panel manufacturing facilities and export to US markets, either, or we import these solar cell in the US facilities and then manufacture panel in the US facility and supply locally. So in either of the case, we are not use solar cell from India any which ways. So this impact does not really comes to us as long as we continue our supply chain resilience. In fact, in the recent past, we have announced that we have got tie-up with manufacturing units in Oman, where we are getting an access to polysilicon also, which is very much FEOC compliant as per US law. That further insulates our upstream supplies as well, even in the upcoming scenarios of new geopolitical, especially the US markets.
Okay. Ganesh, what does this really mean for the industry at large and for you as well? Do you think the focus will be largely to probably shift focus to domestic, or to completely shift your focus in creating more manufacturing facilities and sourcing from the US to avoid any of these escalations if they continue going forward on the duties front or at the tariffs front as well?
Actually, we've seen this scenario pan out since the last year and a half, at least, if not, where the US has been coming down very hard on not just India, but globally, with a lot of changes, a lot of, aggressive stand on global trade. This has certainly made it difficult for companies to pre-plan what is lying ahead and how to make sense of these frequent changes and frequent go backs. Now, as far as Vikram is concerned, we have been mulling our US manufacturing, although because of the change in scenario, we are still working on our next steps as to where we would like to land with respect to catering to our US customers. The work is still out. You will be the first one to know as soon as we will land that plan in place. Although, having said that, I think India becoming one of the after China, the largest manufacturing hub for solar in the world, we stand a very good chance going forward to cater to the world and create a situation when we are competing with China and giving them a run for their money in terms of acquiring and taking over market share. I think that is happening primarily now because China is walking away from a lot of incentive and subsidies which were provided earlier. And this creates a level playing field for large manufacturers with a presence and a brand to call for, like Vikram Solar, to be able to attract those markets and be able to participate in those scenarios. And I think going forward, we see a lot of that happening, whether it is Europe, whether it is APAC or other regions.
Okay. Abhishek, what about the renegotiation need with the existing power purchase agreements already in place or the supply contracts with US developers? How are you really looking at that? Will that need a rethink at this point in time, or things go as is? What happens to the order book?
As I initially said, that the business remains as usual. This really does not impact even the ongoing exports contract, wherein the dispatches are happening as we speak from our facilities. Also, same point in time, our existing order book in US also remains insulated from this, because as long as we are maintaining the solar cell procurement from those countries which are lower tariffs from within the US, I think we continue to be able to export those numbers in the US market. Same point in time, but is more important here, is to also evaluate the local manufacturing in US, which is coming up a big way. 1.6 gigawatt facility we started last year. We are up towards a 4.2 gigawatt facility in next couple of months. More than sufficient to cater to our US markets.
Okay. Ganesh, let me come to you. You were talking about China and how, Indian manufacturers like yours are competing well on the global footprint. When we compare to the existing duties that have been announced of 126%, where does India stand with respect to countries like, say, Cambodia or Malaysia, Thailand, or other countries that also, or maybe Southeastern countries, China and other places as well, where these, or maybe Laos and, such other countries have also been talked about, where they are also facing a surge in tariffs?
The way this the way this has worked and will continue to work is that there are new tariff havens, especially for the US market, like North Africa and other regions, which have the lowest tariff currently, imposed by the US. So, and these now have become sprawling hubs for solar manufacturing, especially cell and wafer. Now, these places will be the regions where solar cells will be used to convert into solar panels and exported to the US. This has been the trend in the last year, so it's nothing new for us. As far as this 126% odd tariff is concerned, this investigation has been ongoing for 9 to 12 months, so we were expecting nothing better or nothing worse than this. And we have been ready for this, so to speak, and it doesn't really impact our performance or our growth.
Okay. Give me a sense very quickly, Ganesh, before I let you go. Over the next 12 to 24 months, what's going to be the key focus of your company in terms of your investments, growth opportunities, and the key drivers for you in terms of both domestic as well as exports?
See, our objective for the next 12 months is to preserve margin and prevent any sort of undercutting and in this price-sensitive market. Parallelly, our objective is also to add more capacity. Our new plants are coming upstream, so we will see significant surge in our overall capacity. Our cell plant is coming on by the end of this calendar year. So there's a lot to look forward to, and also considering large integrated manufacturing taking place, a lot of consolidation is expected.
Okay. Same question to you as well, Abhishek. Since you say that at this point in time, of course, there is no hit at this point, but looking at the global uncertainties, the policy changes that are happening over the next 12 months to 24 months, how are you really going to be strategizing to continue to protect your margins, boost growth, continue with your market expansion in terms of market share as well? How are you looking at it?
So first thing first is the capacity expansion, which is already ongoing. Currently, we are sitting at around 24 gigawatt worth of module capacity all across India and US put together, reaching around 28 gigawatts over the next 3 to 4 months of time. Also, with further backward integration of cell capacity, which is currently 5.4 gigawatt, with new 10 gigawatt facility coming next year, it will be around 15.5 gigawatt capacity. And then comes up 10 gigawatt of ingots and wafers. So that actually creates Bharti as the player, which is fully integrated, with polysilicon already being, I would say, secured from the Middle East markets. That is number one. Another is, apart from solar value chain, how are we really integrating our operations with energy storage systems with large capacity already announced by Bharti? 4 gigawatts is the phase one, which is going live next financial year, followed by additional 16 gigawatt worth of battery energy systems, pack as well as battery cell manufacturing, which is going live over next 18 to 24 months of time. So that will create larger pool of customer base and larger penetration in the market. Apart from solar, battery, and then comes the transformers, inverters, recent acquisitions, which will start giving its impact on the overall scheme of financial strength that we have seen in past also.
All right, all the very best to you, Abhishek, and thanks a lot, Ganesh, also for being with us on this special conversation. Of course, at this point in time, some relief that we can see also as a reflection that both the stocks of Adani Energies as well as Vikram Solar have, pulled up from the day's low point. There is clarification coming in, not too much of a hit and worry at this point in time. But let me go across to Shaina Mukaddam, now market expert, to really understand how should an average retail investor be really looking at the solar companies at this point in time. Warm welcome to you, Shaina. Good to have you with us. We were discussing with the solar companies, Vikram Solar and the Adani Group as well, to try and understand the impact of this 126% tariffs. Of course, the stocks took a beating, but both the managements are assuring at this point in time that one, there is no hit, or no worry at this point in time, that something like this was already getting expected and they had already planned to maneuver any kind of a hit that comes in by way of tariff hikes, because the kind of tariff talk that we are being used to is now about over a year, or so, and therefore the companies were already very prepared. Most of the companies which have started to source from the US will also skip this 126% tariff as well. How would you really look at the solar companies? Because renewable energy was a theme that has been discussed as a long-term, 5-10 years, new sunrise theme that one is investing in.
So the issue out here is a little bit different for both of them. I would say for Vari, which of course is the largest, and could be a good long-term investment. Basically, they will be to some extent impacted by the US tariffs, maybe temporarily, hopefully. At the same time, I think they are trying to build their capacities in US, which would sort of offset it. And also, they have got a good order book. Valuations is a bit expensive. So I would say if one is holding, you can hold for the longer term. But otherwise, if you want to add, it's better to add it at lower levels. And even like for the other company that you just spoke about is Vikram Solar. Yeah. There, I believe valuations are very attractive. But the point is that they have got, if you look at the equity capital, they have got a lot of pledges. The promoter has pledges, which I see along with these issues in terms of US not wanting, to really focus on solar. I think that could be some sort of a issue in the medium term, shorter to medium term. So I would say Vikram Solar, definitely look if you want to add at lower levels, and also then you would have to hold it. And we discussed the others. I think solar renewable energy in the Indian market has got a lot of demand. So if you look at Indian market, yes, it's going to continue to perform. So just in terms of buying, be a bit careful now because the sentiment is a bit weak given the news that we're getting from US.
Let's shift focus to the railway space then. I'll talk about IRFC. The stock's down by 4% in trade today. Remember, the subscriptions have opened for 5,400 crore rupees OFS, through which the government will be offloading 4% stake in the company, 2% for first, and the 2% green shoe option will also be exercised. The stock, in fact, slipped to a year low as well. Meanwhile, the IRFC chairperson, M.K. Dubey, also spoke on the need for proper viability gap funding mechanism for infra projects, which traditionally have had a long gestation period. Let's look at what he had to say.
Passenger-oriented state transport system, be the metro or the trains, you cannot run with the PPP model unless you are giving sizable VGF or viability gap funding for that. In the worldwide, viability gap funding is right up to 90% also. We have a limit of 40%, sir. If you can correct me if I'm wrong. With 40% gap, you can't do. So, to summarizing things, high-speed rail corridors where you typically travel 500 and 600 kilometers in 2.5 hours without going to that hustle and bustle of the airports is a need of the country. Today, we're moving very fast all over the country. That is why perhaps government has come out with high-speed rail corridors. Take it from me, land and execution will be on time. Today, European models are also there in the country. We are not only dependent upon the Japanese model. So execution will be very fast. But I'm sure that it will require viability gap funding from the country. You won't be having a sustainable model just on the fare box that आप उसको 10,000 रुपया लेंगे और यहाँ से बोलेंगे कि हम आपको बड़ौदा ले जाएंगे, तो perhaps that won't be a successful model. But it is a requirement like a metro railway. So this model will flourish in the country, and of course that has to be subsidized, because infra is, in terms of the railways or metro railways or the high speed, coming for 100 years. You can't have a system of return in 25 years.
All right, Shaina, coming to you, especially on the railway pack as a whole, we have seen a lot of long-term pain now. The entire last year, they have underperformed. This year, continuing to be the same story. You've just heard the management of IRFC talking about the viability gap funding, but the performance also has to be seen. Was this a valuation problem because the stocks were, highly owned by retail investors, mutual funds that, once, all these stocks came into focus, there were several IPOs that came in at one go, and for a long time now there has been a complete miss on this kind of a performance that we've been seeing here. How would you really look at the railway space at this point?
Yeah, so basically over here what has happened is that the combination of factors, one major being that the numbers have not really kept pace. Basically they have not really, there's been some gap in terms of execution. Order book has never been an issue for most of these railway companies. That is why, and plus the valuations, as you discussed, were on the higher side. Given that most of the stocks have either corrected or consolidated over the last couple of quarters. Even if you take the example for IRFC, now the issue out here is like the stock also has corrected. The equity, and still even from here, the government still owns, I believe, more than 80% equity or 85% equity, more than that. So even if they're going to offload about 4%, the overhang to bring it down to 75% will still remain. So I don't see too much of a strong upside for any of the railway stocks over the next 2-3 quarters. And, we'll have to wait and watch. But I think the also other impact is the higher raw material costs. Which is impacting their overall margins. Other costs in terms of labor code has impacted them. So I would say that this sector is likely to consolidate, not likely to be a strong performer over the next 1 or 2 quarters.
Okay, 2 minutes to go before the market shuts up for the day. But what is your own expectation, China, with the kind of range-bound trade that we are looking at? One day the markets are up, the second day they are down. What is the strategy that you are devising for your clients at this point in time? There's so much of, kind of talk that is surrounding us, which indicates that India has perhaps become a trading market and nothing, traders market, and nothing beyond that. We've seen how the FIIs have been just playing, the highs and the lows in the markets and not really staying in long. How are you looking at then devising strategies?
I think, the index is not going to go too much up or down from here. It's going to be a stock pickers market. Basically, some of the larger contributors to the index, if you take, for example, if you take IT, if you take some of the FMCG stories, if you take Reliance, some of the oil OMCs, and also as well as some of the other larger stocks, they are not really, showing any great upside movement. So I believe it will remain in this space. In fact, now the closing has been pretty okay, given the fact that we had seen this sharp correction post-lunch. So let us see if we can maintain above the 25,500 type of levels. And we will have to wait and watch. But I think it's a stock pickers market.
It is a stock pickers market. That's the word that we have from China. Let's look at wrapping up the markets for you viewers now. About 52 points higher at 25,471. So we've slipped below the 25,500 mark. Remember, we held on to that mark for a large part of the session today, even beyond 25,600. But it's the second half where we lost a lot of ground there. The Nifty Bank is now inching closer to ending into the red, 0.08% lower in trade. A lot of choppiness through the way is what you've seen. And this is on the back of PSU banks declining in trade. This is despite the fact that IT stocks recovered after 5 days of a consecutive decline that we've been seeing on the space, 1.5% higher, so some climbing up back, but it's the PSU banks that declined today. You saw the FMCG stocks, real estate stocks, all of these sectors really decline in trade as well. So about half of the sectors that underperformed in trade. But pharma, auto, IT, these were the sectors that really performed well, and we did also see some gains coming in on the small and the mid caps as well. Those were the also sectors sectors that really moved up in trade. You can look at what the pharma index is doing, 1.8% higher. That's how it is ending at. In the same way, this was the top moving sector, by the way, today. The autos followed with again gains coming in, and also the metal stocks, they were shining bright in trading session today as well, about 2% higher in trade. So all of these sectors were positive. On the Nifty, you had Bajaj Auto, HCLTech, Tata Steel, Tata Consumer Products. These were the stocks were higher, but Reliance, SBI, Eternal, Adani Ports and Bharti Airtel were the stocks that declined in trade. Let's take some questions of yours now, viewers. A lot of you have sent us your questions. We'll take a few of them. Prasoon from Bhopal says, is the worst over for IT sector? Should I start accumulating the stocks for long term? That's a valid question, Shaina. We have been seeing last 5 days of a rout on the IT stocks, AI fears, so much more tension around the global uncertainties that continues. But today there was some bounce back. Should one hurry up to now buy in or still wait, and there could be some more volatility ahead?
Well, I think, you don't need to jump in and start buying right away because the sentiment still remains, I would say, overall negative. To some extent, there is a bounce because of the substantial fall that we've seen. I would say if you want to be into IT, which of course the correction is making the sector look attractive, be in one large cap, be in one small to mid cap IT stock. Like for example, in the large cap, I would suggest something like an Infosys, and don't buy everything at one shot. Buy it in staggered way. Infosys is about 18 times P. If you look at the EV by EBITDA, it's about 13 times. So it is not expensive. The only issue out here is what will be the impact of the US and large developed markets shifting the IT spend towards AI and AI related and moving away from the traditional service related IT spend, and what impact that will have over the next 1 to 2 years on the balance sheet and financial numbers of the service related companies like the large cap IT companies. That is an issue, but I think valuations are decent. Start buying, not too much as of now. Wait for a couple of quarters to add more. In the small and mid cap, something like KPIT, something like Persistent, they have also corrected. But the valuations have started looking a bit more attractive than what they were. Still, it is more expensive than the large cap IT. But I think if you're holding it for the 3-year period, there also you can start nibbling. But I think keep a limited percentage of your portfolio in IT, at least for the next quarter or two, till the air settles down to exactly what is happening. So I would say you can start nibbling, but keep it largely underweight in terms of your overall portfolio.
Fair point. Let's take the next question. Preeti Chauhan from Mumbai asks you, Shaina, is it safe to invest in banking stocks? I've heard about frauds at IDFC First Bank. Okay, that's a fair question as well. Even the banks that are seen in good regard in the private space are also reporting these frauds. It was used to be seen in the history that PSU banks were subject to such frauds. What would you say now for all those who have, heavy exposure to banks?
Well, I think banks will do well in the next 1 to 2 years, no doubt. We have seen some of the banks like SBI giving you a good, they have sustained their stock price, despite whatever has happened in the overall market. And that is purely because of valuations. And also they have raised enough funds to sustain a decent growth in terms of their loan book going forward over the next 2-3 quarters, one year. So I would say stick to the large cap banks because their balance sheet is very strong. Their capital adequacy is very strong, and they can support any, whatever, if at all, some such issue comes up, their balance sheet supports it. Similarly, if you see for IDFC, I don't say you should buy it now because the things are still not very clear as to the exact impact of, say, Haryana government reducing their exposure to IDFC. But, their balance sheet was strong enough to make the payment of 500 crores immediately. As per the demand, and the impact in terms of valuation, despite the this payment, while it will affect the fourth quarter, which I see the stock remaining at current levels, but in the longer term, valuations are not expensive because it will be a FY27 upon 1.5 times book. So these are issues, but I think you stick to the larger names in PSU as well as in private sector, ICICI Bank, HDFC Bank. And if you're holding it for 3 to 5 years, you're going to, get a decent return.
Okay, large caps both in private and PSUs would continue to make sense for the long term. Thank you so much, Shaina, for being with us on the show and, of course, helping us with all the right strategies for our viewers as well. With that, viewers, it's a wrap on the Business Today show. In case you too have any questions about your investments in mutual funds, your SIPs, stocks, or even gold-related queries, then send them to us on the number that's flashing right on your screens here. With that, it's a wrap. Many thanks for tuning in. Don't forget to tune in at 9 a.m. tomorrow morning for all the market opening action.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Delhi police arrest Youth Congress chief Uday Bhanu